Okay, hello Brian Stratton students, my Accounting 1 people, how you guys doing? This is Dr. Sam, and as promised, we are going to go over problem 2-1A, which is on page 86 and 87 of the hard-covered textbook. If you have the soft cover, I'm not sure what page it is right offhand, but we're looking for problem 2-1A. And the problem starts off by saying Carla Tanner opened a web consulting business called LinkWorks and completed the following transactions in its first month of operations. So as you can see here, I've got the general journal, the general ledger, the trial balance, and the financial statements. We're going to complete all aspects of this problem from start to finish. Your homework for tonight is to do basically 2-3A, which is on page 87 and 88. And that company name is Venture Consultants, and the owner is Denzel Brooks. But for today, we're going over this question, and then for homework due next class, you're going to do problem 2-3A. So just like if you haven't already, you want to download the template. I know I handed them out in class, but if you want to also download another copy so you can follow along step by step, you're more than welcome to. But we're going to go through this process, and hopefully, you did well in attempting to do this on your own. If not, I'm going to walk you through it step by step. And then when we're done, I want you to do problem 2-3A on your own, and we'll go over it in class next Tuesday. Okay? All right, first transaction, April 1st. Oh, you know what we should do first? Let's go ahead and let's insert the current year above every spot that you see the word date. So I'm going to go in there and put 2020 above all of them. This way we don't forget to do it later. So just kind of knock this out right now. Remember, on the test that you'll be taking in 2 weeks, not next week, but the week after, if you forget what I'm doing right now, if you forget one or you forget all of these 2020s here on the general ledger, it'll just cost you a total of 1 point. Not 1 point each, just a total of 1. This 2020 that I put above the date column in the general journal, that's worth 1 point by itself. So we want to make sure that we don't forget that. Okay? Okay, first transaction, April 1st. So we're going to put APR 1. We'll write the month of April one time, and then we won't bother doing that the rest of the page. If we start a brand new page, then we'll put the year, the month, and the day once again. But after this point, I will only put the day next to the very first debit of each transaction. So first transaction, April 1st, Tanner invested $80,000 cash along with office equipment valued at $26,000. So what we're going to do here is recognize that we had 3 moves. So they hit you with a dandy right off the bat. So instead of the typical minimum of 2, yeah, we have a minimum of 2. We actually have 3 in this case. So we want to debit the cash, because that's what the owner gave to the business, and that was at $80,000. We also want to debit the other thing the owner invested in, that was the office equipment. Now remember, I am stuck using the account titles that you see here in the ledger. So if I were to just write equipment here, I would lose points. I would dock you a point, because notice it's actually called office equipment. So these are the titles I'm allowed to use in the problem. I cannot vary from these titles. So don't be calling something revenue when it's called service revenue. Don't call something rent expense if it's called prepaid rent. You can't change the name. And just a reminder, remember all assets start with a 1. So look at all these 1s, all the way from cash to office equipment. Liabilities start with 2s. We only have 1 liability here. Capital and drawings start with a 3. Revenues start with 4. And in this course, expenses start with 6s. And then I copied them over here just to save us a little bit of time. But on the test and in the homework, you will have to fill in this portion that I've already pre-filled. Okay? Okay, so let's continue where we left off. So the office equipment was $26,000, and now I'm going to credit capital. And it's going to be K Tanner capital for the total of those two. Okay, why did I use capital? Because the question said the owner invested. That word invest is your trigger to use your capital. So let me just remind you of like our little tips and tricks here. So let's label this tips and tricks. So one of the tips and tricks is that we have to have a minimum of 2 moves. So you can have 3 moves, 4 moves, mostly it's 2. If you see the word capital, or I should say, if you see the word invest, or invested, or investment, any form of the word invest, that will equal you crediting capital. So if you see the word invest or invested in the problem, you know you're going to credit capital. Okay. Another one that is one of those little trigger words is if you see the word paid. And if you see the word paid, you know you're going to credit cash. Remember that your first move in any account must be positive. So you can never have a negative balance in any of these accounts. So first move must be positive. Also remember that you only debit drawing and you only debit expenses. Those are 2 accounts that just go up. You only credit capital and only credit revenue. Those are the shopping cart accounts, if you recall. Or in reality, the owner's equity accounts only go up. Don't forget we've got debit aid and we've got liquor. So the debit aid accounts go up by a debit, and then you got your liquor accounts. They go up by a credit. So those are our little tips and tricks. We don't want to forget those. Okay. All right. So back to regularly scheduled programming. So here's our first transaction. We want to basically take this information that we just did in step 1, which is the general journal, and now we want to transfer that into the general ledger. Remember, when you go from the journal to the ledger, it's called posting. So let's add that. Posting is when you copy from the journal to the ledger. That is posting. Okay, so let me highlight all the spots we're going to. And let me go ahead and complete the posting process. So the date is the same date as before. April 1st, nothing in the item. We're posting from G1. Remember that G is from the word general in General Journal, and that 1 is page 1 that the General Journal page is on, that we're copying from. Then we're going to debit cash for $80,000 because it was a debit in the journal, and our new balance is $80,000. Cross-reference back with the account number 101. So cross-referencing is when you go from the ledger to the journal and you enter in the account number. Okay, so office equipment, let's post. So the date, April 1st, nothing in the item. We're going to put a G1 in the PR. We are debiting the office equipment for $26,000, and our new balance is $26,000. Cross-reference back with the 163. And then let's update our capital account. So the date is again April 1st. Nothing in the item. G1. We are crediting capital for 106. And your new balance is 106. Then take the account number 301 and cross-reference back to the journal with that result. You have now completed your first transaction. We have journalized and we have posted, and then we cross-reference back into the PR column. So by filling in this first PR column, it's telling yourself that you have completed the copying. Now remember, when you're putting stuff in the general ledger, you're literally copying what you did in the journal and then updating the balance as you go in each account. Okay, let's do another transaction. This transaction, according to the textbook, is on April 2nd. So we're just going to put a 2. We're no longer going to write April. It's assumed to be in April. So it says the company prepaid $9,000 cash for 12 months rent for office space. So I see the word paid. That's just like seeing the word, I see the word prepaid. That's just like seeing the word paid. So I'll put over here paid or prepaid. You see that, you're automatically going to credit cash. Okay, so I know I'm going to credit cash. So the only other question is, what do I debit? Well, let's reread the question. The company prepaid $9,000 cash for 12 months rent. Okay, so look through your ledger. Do you see any account with the word rent in the name? And here it is. And since it did say prepaid, this has got to be the one. Prepaid rent is an asset. How do I know it's an asset? It starts with a 1. Also, you can go back to your first day's notes where I outlined what assets were, and prepaids were one of the examples that I gave. So if this is an asset, my first move has to be an up. How do you increase an asset? Debit. So I know I'm going to have to debit the prepaid rent. Plus, if you remember, we saw the word prepaid. So instantly we know we're going to credit cash. So we're going to debit prepaid rent for $9,000 and we're going to credit cash. Notice that in my journal, my debits are first and to the left. My credits always follow my debits and my credits are always indented. So the words look indented, the numbers look indented. So let's go post. So we'll put prepaid rent over here. And we will end up copying into cash. So let's go in the same order as they appear. So April 2nd, G1, I am debiting prepaid rent for $9,000, and now I'm going to update my balance. What do I do next? I got to take the account number 131 and cross-reference back to my journal. Now let's go update cash. The date is the 2nd. G1, we are crediting cash for $9,000, and cash is an asset. How does an asset go down? You subtract. So when you credit, you subtract. So 80,000 minus the 9, our current balance in cash is 71,000. Cross-reference back with the account number 101. So that transaction is now completed. Let's move on to the third. And it says the company made credit purchases for $8,000 in office equipment and $3,600 in office supplies. Payment is due within 10 days. Again, if you happen to be listening to this video or watching this video for just general accounting purposes, I'm actually using information that is out of a textbook called Principles of Financial Accounting by Wild, Shaw, and Chiappetta, 23rd edition. So if you don't have that book, I apologize, but this particular video is dedicated to my Accounting 1 students at Bryan and Stratton College. In lieu of tomorrow's class, I'm doing the video instead. So normally my transactions are generic and not for any particular school, but this one is for my Bryan and Stratton students. Okay, so anyways, company made credit purchases for $8,000 in office equipment. So let's put the date, the 3rd. Let's now debit office equipment, and that is for $8,000. In addition, we bought something else, and it says we also bought $3,600 of office supplies. So this time we've got 2 debits again, and I'm going to credit. Do I credit cash or do I credit accounts payable? Well, let's reread the question and see if it's kind of told to us. I always assume cash unless I'm told otherwise. Like if they say, hey, you bought it on credit, or you charged it, or you got to pay it later, that's when we know we got to use accounts payable. If they say nothing, I'm going to go with cash. But let me reread the question. The company made credit purchases. Ding, 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 right there. So I know it has to be accounts payable. And then if I read the next sentence, if I didn't catch the word credit, it says payment is due within 10 days. So again, if I paid in cash, why would they be telling me I have 10 days to pay it? So bottom line is I'm going to debit my office equipment for $8,000, debit my office supplies for $3,600, and I'm going to credit accounts payable for $11,600. So let's go post these guys. Okay, so let's find the office equipment. I'll highlight where I want to go here so you know where I'm going. And let me find accounts payable. There it is. Okay, so let's post. I'm just going to put a 3 in here because I've already been in here. Nothing in the item. G1. I am debiting my office equipment for $8,000. So you tell me, is my office equipment going up or down? If you said up, you are right, because it's an asset. Whenever you debit an asset, it goes up. It's a debited account. So remember, debited accounts go up when you debit them. So assets drawn in expenses, when you debit them, they increase. Okay. Another thing, I know Valentine's Day has just passed, but let me just remind you of something that could help you in the ledger. Whenever you have something that has a debit balance and you debit it, debit, you add. If something has a credit balance, like accounts payable, and I credit it again, credit, you add. So debit, you add, credit, you add. But remember the old Valentine's expression, opposites attract? Well, in accounting, opposites subtract. So if you think of this one here, look at cash, 80,000 debit balance, and then I credited the account. Opposites, subtract, and that's how I got the 71. Okay? So just a little extra stuff there to help you remember. So I posted this 8,000, updated my balance, cross-reference back with the 163. Find the office supplies, first time in here, so I need April and a 3. Nothing in the item, G1. I am debiting the office supplies for 3,600, and my new balance is 3,600. Cross-reference back with the 124. Then find accounts payable and follow the same procedure. First time in here, April 3rd, nothing in the item, G1 in the PR. I am crediting accounts payable. It's my first time in here. I better be crediting it because it's a liquor account. Remember, L is for liabilities, C is for capital, R is for revenue. First time you use a liquor account, it better be a credit. And sure enough, we have credited it for the first time, and our new balance is 11.6 credit balance. Cross-reference back with the 201. So at any point in time, if any of these balances end up negative, you've screwed up. You've made a mistake. Make sure you always adhere to these tips and tricks. Debit accounts go up by a debit, which means they go down by a credit. Liquor accounts go up by a credit, which means they go down by a debit. So you just have to really keep these two things straight. So remember my two glasses, the lemonade, Gatorade, Powerade, Debit-Aid. Debit-Aid accounts go up by a debit. And then the liquor, the martini glass, those are the liquor accounts. They go up by a credit. Okay, let's go on. So the next transaction is on the 6th. And this one says, the company completed services for a client and immediately received $4,000 cash. Great. I'm going to debit cash for $4,000, and I'm going to credit my revenue account. I scan through my lists in my ledger, and the only thing that has revenue in it is this. The only thing that starts with a 4 is this thing called service revenue. I can't just get away with just calling it services or just revenue. If they call it service revenue, we got to call it service revenue. Okay, let's update our accounts. Remember, service revenue is a revenue account. And look at this little tips. Only credit capital, only credit revenue. I have credited revenue, so I never debit that account. So cash, 6th. Nothing in the item. I'm posting from G1. I am debiting my cash. So cash has a debit balance because it's an asset. If I have a debit balance and I'm debiting, debit, we add. So 71 plus the 4 gives us a balance of 75. Cross-reference back to the journal with the 101. Service revenue, first time in here. First time I use something, it better go up. It's a revenue. What's revenue? It's a liquor account. How do liquor accounts go up? Credit. And that's what I did do to it. So I'm following the rules. I'm not breaking the rules. So April 6th, nothing in the item. G1. I am crediting this account for $4,000, and now my new balance is 4,000 credit. Cross-reference back with the 403. We've now completed the first 4 transactions. On the 9th, we have another transaction. Let me come up with a new color here. And on the 9th, it says the company completed a $6,000 project for a client who must pay within 30 days. So we did a job for $6,000. And this time, though, the customer didn't give us the money. So we're waiting to receive. So that means I'm going to debit accounts receivable. And we're going to credit service revenue again. Remember, accounts receivable is just a temporary account until we collect or receive the cash. So accounts receivable means we're waiting to receive the money. We just don't have it right yet. So April 9th, nothing in the item. G1, I am debiting accounts receivable for $6,000. My new balance is $6,000. Cross-reference back with the 106. And then service revenue. The date again, just the 9th. G1, I am crediting revenue for $6,000, and my new balance is now $10,000 in this account. Credit, credit, you add. Debit, debit, you add. It's only when we do opposite do we subtract. Cross-reference back with the 403. All right, moving right along here. Now again, you have the luxury of watching this on video, so if anything I've done, I've gone too fast for you, just rewind it. Listen to it again. Remember, read your chapter. Your chapter is one big set of pictures, which is basically what I'm doing. So it's not like reading a novel where you got to put your feet up and try and understand it. It's picture after picture. Take advantage of that. They also have a solved problem at the end of the chapter. See if you can do that one. And then, of course, you've got my videos to help you as well. Okay, next transaction's on the 13th. And on the 13th, it says the company paid. Ding, 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 ding. There's that word paid. So we know we're going to credit cash instantly. Remember one of the tips and tricks right here. If you see the word paid or prepaid, automatically credit cash. So I already know my credit. I'm actually going to put it in the credit spot. They said paid 11.6. The company paid 11.6. So that means I got to debit something for 11.6. So let me continue reading. The company paid 11.6 to settle the accounts payable. They're telling you what to use. I won't be that nice on the test. I'll just say paid on account. So you have to look at the account that shows what you paid in the past or what you were planning on paying. Okay, here it is, accounts payable. This is what I plan on paying. Now they're telling us we paid it, so we no longer owe it. If it started out with a credit, the only way to pay it off is to debit that account. So I'm going to debit accounts payable. Keep in mind, I always have to write my debit first and then my credit. This is universal language all over the world. Nobody does this differently. Everybody does it the same way. So don't go off on your own and try to be, Joe Special. You can't do that. Right? As much as I love that you'd want to, you just can't. It's just, that's the protocol. Okay, so then we got the date, the 13th. Nothing in the item. G1 in the PR. I am debiting accounts payable for 11.6. What happens when you debit a liability? It goes down. And that's what happened here. So my new balance is 0. So I had 11.6 credit. I debited the account. Opposite subtract. My new balance is 0. Cross-reference back with the 201. Then let's update the cash. Date is the 13th. G1, I am crediting cash for 11.6. Is my balance in cash going up or down? If you said down, you are right. Opposite subtract. Cash is a debited account. So if it has a debit balance and you credit it, you subtract to get your answer. Cross-reference back with the 101. Okay, next transaction's on the 19th. And on the 19th, it says the company paid. Ding, 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 ding. I don't have to read the rest of the sentence. As soon as they say the company paid, I'm crediting cash automatically. Company paid $2,400. So look what I'm able to fill in just by seeing the first few words of that sentence. It says the company paid $2,400. Automatically, I know 3 out of the 4 things I got to do. Now all I got to do is figure out what to debit. So let me keep reading. The company paid $2,400 cash for the premium on a 12-month insurance policy. Look through your list. Is there anything with the word insurance in the name? This is the only one I see. All right, it's prepaid insurance, so I guess that's our lucky winner. So we're going to debit prepaid insurance. Is it okay for me to debit prepaid insurance? Sure. It's an asset. First time I use an asset, it's got to be a debit. That's how it goes up. And sure enough, I needed a debit. So everything I do, I should be able to back up with my rules. So, first time in here, April 19, nothing in the item, G1. I am debiting this for 2,400. My new balance is 2,400. Debit. Cross-reference back with the 128. Then cash. Update that again. Date 19th. G1. I am crediting cash for 2,400. And what happens to cash when you credit it? If you said it goes down, you are right. So our balance in cash is now down to $61,000. If you notice, we started with 80, and we've been slowly coming down. Okay, next transaction's on the 22nd. And on the 22nd, it says the company received $4,400 cash. So if we're receiving money, we're going to debit cash. Now, why did we receive it? Well, let's find out why. It says we received $4,400 cash as partial payment for the work completed back on April 9th. Let's go back to April 9th. Here it is right here. On April 9th, we did a job. But the customer didn't give us any money, so we were waiting to receive. Well, guess what? We just received 4,400 of that 6,000. So what we're going to do is we're going to credit that customer's account. The customer is very happy when we credit their account. That means their balance is going down. So let's prove it. Let's first update our cash. Date is the 22nd. G1. We are debiting cash for 4,400. Yay, cash is actually going up for a change. And our balance now, 65.4. Cross-reference back with the 101. Now let's go credit the customer's account. Remember, accounts receivable represents what the customer owes us. So they owed us originally 6,000, but they just gave us some money. So we're going to credit their account, leaving them with a balance of 1,600. So that's all they owe us now. Cross-reference back with the 106. Remember, assets can go up and down, liabilities can go up and down, but your 4 equity accounts, the shopping cart accounts, only go up. Then we've got the 25th. And then on the 25th, it says the company completed work for another client for $28.90 on credit. $28.90 on credit. So we did a job, but we did it on credit. So we're going to debit what? If you said accounts receivable, you are right. But what are we going to credit? We did a job. If you said service revenue, you're right again. So let's go post. So accounts receivable and revenue. So let's update the receivable. Date is the 25th. G1. We are debiting this account for $28.90. What happens to accounts receivable when you debit it? So go through the logic. What is accounts receivable? It's an asset, which means it's a debited account. If it's a debited account, it carries a debit balance. And now I'm debiting it. Debit, debit, you add. So 1,600 plus 2890. Our new balance is 4490. Cross-reference back with the 106. Okay. Update service revenue, 25th, G1. We are crediting revenue. Hey, by the way, we always credit revenue. Remember over here? Only credit capital, only credit revenue. Well, that's what we're doing. We're crediting revenue. So now my balance in revenue continues to climb. That is what is typical of all four equity accounts. They just get larger and larger and larger as we put stuff in there. That's why I call them shopping cart accounts. It's like we won a shopping spree. We're just filling the carts. We're not taking anything out of the cart, just filling. Okay, 3 more transactions to go. We're now on the 28th. And on the 28th, it says Tanner withdrew $5,500 cash from the company for personal use. So whenever an owner takes money out of the business for personal reasons, that's what we call a draw. Okay? Highlighting needs improvement here. There we go. All right, so we are looking for an account with the word draw in it, and there it is, K. Tanner Drawing. And because the owner took money out of the business, we're crediting cash. What's the amount of the draw? $5,500. And let's go post. First time we've been in drawing, so I got to put April and the 28th. Nothing in the item. G1. We are debiting drawing. Drawing is a debit aid account. Your first move must be debit. Cross-reference back with 302. And then update your cash. Date is the 28th. G1, we are crediting cash for $5,500. And since the owner took money out of the business, the company's cash is going down. Cross-reference back with the 101. Let's go rust color. Next transaction is the 29th. And on the 29th, it says the company purchased $600 of more supplies on credit. So we're going to debit office supplies. And hopefully you're thinking accounts payable. Why accounts payable? Because we got to pay it down the road. And this is for $600. So let's go post. Alrighty, so in supplies, just the 29. G1, I am debiting the supplies for $600. And my balance in this account has now moved up to $4,200. Debit, debit, you add. Cross-reference back with the 124. And then with accounts payable, date is the 29th. G1, remember our accounts payable was 0, and we're crediting this account for $600, so we went from 0 up to 600. You can't have negative. Don't forget that. If you have a negative somewhere, you've made an error. Okay, one last transaction to go. And this one is on April 30th. What does April 30th say here in the textbook? The company paid. Ding, ding, ding. I know I'm going to credit cash. So credit cash. Continue to read. We paid $435. Again, just by reading those first few words, I got 3 out of my 4 answers that I need. So I just got to figure out what we paid. Continue reading. It says for this month's utility bill. So if I were to debit utility bill, that would be wrong. Is there such a thing called utility bill Over here, nope, there's something called utilities expense. I got to use that name. Don't go using your own lingo. So there's utilities expense. So let's update our accounts here. And then our step 1, step 2 dance will be completed. So first time in here, April 30th. Nothing in the item. G1. I am debiting utilities expense because I always debit expenses. So that's pretty natural for us to do. Cross-reference back with the 690. And then cash. Definitely not the first time we've been in here, but the date is the 30th. G1. I am crediting cash for $435. And what happens to cash when you credit it? If you said it went down, you are right. And then cross-reference back with the 101. Okay, so it looks like we're in balance. I mean, there's nothing that's jumping out at me that says I screwed up, left out a 0 or added a 0, but you really don't know. And then over here, look at all the math, all the copying we had to do, all the adding and subtracting we had to do in this document. So there's a lot of potential for screw-ups when we just copy. As simple as this procedure is, a lot of mistakes happen in the ledger. You could put in the wrong spot, the wrong ledger completely. You could add instead of subtract. Well, to find out if we're truly in balance, that's what step 3 is for. This is the trial balance. So as I said earlier, I've already filled this in partially. I filled in the account numbers and the account titles. When you go to do the homework or the test, these won't be there. Okay, you have to fill them in. You've got to know that the trial balance is in the same order as your ledger. Look at the pattern here. 1, 106, 124, 1. They're getting larger and larger and larger. So no excuse for having your trial balance out of order. It always goes from smallest number to biggest number. Okay, so the company name, as we said before, was LinkWorks. And the name of the document is Trial Balance. And then we're doing this for the end of April. So we're going to write April 30th. Actually, don't write the TH, just April 30, 2020. Okay, so now I'm going to copy my final answers from each ledger into my either debit side or credit side. Okay, so here's where your debit aid and liquor kick in again. The debit aid accounts end up on the debit side. The liquor accounts end up on the credit side. So all the ones are assets. So they should be on the debit side. Hang on, let me just fix this a little bit. Okay. Accounts receivable, final balance was $44.90. Office supplies, final balance $4,200. Prepaid insurance, final balance $2,400. Prepaid rent, final balance $9,000. Office equipment, final balance $34,000. Accounts payable, that's our first liquor account. So that ends up on the credit side. Capital, that's a liquor account. Ends up on the credit side. Drawing, that's a debit aid account. That ends up on the debit side. Revenue, liquor account, ends up on the credit side. Again, I'm just copying my final answers only from the ledger. Expenses, a debit aid account. So that carries a debit balance. So now, moment of truth. Let's put in our little math line, and now let's add up the debits. I get $119,490. Let's add up this side, and we get $119,490. And it looks like we are in balance. Okay. So now from this trial balance, we are going to do the 3 financial statements. So let's color coordinate. So in the trial balance, let's make the revenues and expenses yellow. We'll make the capital and drawing green. And let's make the assets and liabilities blue. Okay? And then I'll come over here and I will make our balance sheet blue. I will make our statement of owner's equity green. And I'll make my income statement yellow. Okay? So from this trial balance, the yellow ones will go in the yellow doc, the green ones will go in the green document, and the blue ones will go in the blue document. So let's put in the heading, Link Works, income statement, and this is where we got to write the long date, remember? So for the month ended April 30th, 2020. Make sure the heading appears centered. I'm just going to go ahead and do all the headings while I'm thinking of it. Again, all the headings must appear centered. So I've got the headings all taken care of. Remember, the objective of the income statement is to figure out whether or not the company had a profit. And the only things that help you figure out profit are revenues and expenses. So we start off with the heading, with the heading revenue, followed by a colon symbol. Remember that colon symbol is to remind you to indent a list of all the revenue accounts you had. Well, we only had one. So we are going to list service revenue. And because we only have one, that 12,890 goes all the way to column number 2. We've exhausted all the revenues, then we go to expenses. We only had one, but if I had multiple, I would be indenting all of them. And I would be using column 1 if I had more than one. I would do the same thing if I had more than one revenue as well. So column 1 is for itemizing, column 2 is for grand totals. Since I only have the one revenue, it is my total. So that's 435. I like to put my subtractions in red. You know that by now. So now let's subtract 435 from the 12,890, and we end up with 12,455. And now we just have to figure out, is that a net income or a net loss? I can't hear you from where you are. Hopefully you are shouting at the screen, "It's a net income, Dr. Sam!" And if you said that, you are right. Okay, and that's our answer for the income statement. So we've exhausted the 2 yellow ones, right? They went into the yellow document. Now we got to do the green document, and there's 2 accounts that I put in green. So we're about to do the statement of owner's equity. We're going to, remember, this document starts with capital, ends with capital. Remember in class, I always held up my hand. I said I got 5 fingers. This document is always 5 lines long, no matter what. So we're going to start with K. Tanner capital. And because we're going to put capital twice in this document, we differentiate the 2 capitals by the beginning of the month date and end of month date. So we'll put 3/1/20 to indicate that that was the beginning capital. and our beginning capital was this 106. Don't forget, if you remember how I did this in class, we never even used column 1 in this document, so I'll just kind of darken it out right off the bat here. All right, so this is a one column style presentation. So now we're going to take the answer from the yellow document and add it to our beginning capital. It is optional for you to write the word add. I've written it in there. So now we are going to plop in the 12,455, representing our net income. I'm now going to add that 12,455 to the 106, and we don't have a really good name for this answer, so we just call it subtotal. Then we're going to subtract out our drawing, and the amount of the draw was 5,500. Let me put that in red because we're about to do a subtraction. And our final ending capital, 112,955. Give that a dollar sign. Remember the rules for the dollar signs, you guys? First number in each column gets a dollar sign. Final answer. This final answer is our ending capital. So K Tanner Capital on 3/30/2020. Looks so weird to write that. All right, almost done. So balance sheet, we're trying to figure out, do our assets equal our liabilities plus equity? So under assets, we got all those ones in blue except for the last one there. We got cash, accounts receivable, office supplies, prepaid insurance, prepaid rent, office equipment. Literally, I took all of them from right here. And now I'm going to copy all the numbers. 59,465, 4490, 4200, 2400, 9,000, and 34,000. And I think I skipped, oh, I put them in the wrong spot. Hang on. That stinks to do that. But no big deal when you're working on the computer. Easy fixes. So one more time, cash is 59,465. Accounts receivable 4490, 4200 for the supplies, prepaid insurance 2400, prepaid rent 9,000, and the office equipment 34,000. Okay. So we're going to add them up, and we're going to put their answer, or put the answer, in column 2, our total column. And I get 113,555s. And I just now need to identify this. Well, what did we add up? All our assets. So this is called total assets. Remember my joke from the first test? If you forget to write this phrase, you make a total asset of yourself. Dun-dun-dun. Shh. Thank you. Thank you very much. You better be smiling. Okay. Next section, liabilities. Under liabilities, I have one last blue account, and that's accounts payable. Since I only have one, it goes all the way to the end, 600 bucks. I don't have any more liabilities. I go to my last category, which is owner's equity, and now I'm going to copy my answer from the green document. So K Tanner Capital, and that's 112,955. And here comes the final moment of truth. So 600 plus this 112,955. Please let it equal 113,555s. Dun, 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 dun. It does. So, gotta double underline that answer. And then I call this version of 113,555s total liabilities and owner's equity. And that is it. Okie dokie. So I'm going to post this to my Blackboard under content. So hopefully, if you need to look at these answers without having to go back to the video, you'll have access to them. Okay? So that's it. Sorry I'm not there tomorrow. Like I said, I'm getting my biopsy done on my prostate. Hopefully it will not come back cancerous, so hopefully I'm good to go and we can move on in a happy direction. All right, but I'll keep you guys posted. All right. Thanks for understanding. Talk to you later. Bye-bye.